webinar. Let's get ready. Hi, everybody. Welcome to our very, very special webinar with Turney Duff, the author, the New York Times bestselling author of the book, The Buy Side. I'm going to send out the links right now to everybody, and then I'm going to turn over the mic over to Rob and let him talk to Turney and just discuss the much more inner working details of what's going on. So I'm going to mute myself out, and then we're going to come back and we're going to do Q&A, and everybody's going to get a chance to ask Turney personal questions. So I'm over and out, and I'm going to turn it over to Rob.
Hey, Rob.
Hey, Turney, what's going on, man? All right, so I am like 1,000% excited to ask you 200 questions. I hope that's all right. All right, so I read your book on the plane yesterday, and I read a lot of books, and I read a lot of books about the financial markets, and about 1 out of 50 books is worth finishing. And the first thing I want to say at the get-go here is, everybody, you really need to read this book. There's some great stuff in this book. So I want to encourage you guys, if you're here in the webinar tonight, you're getting a chance to talk to somebody who made a career out of making money, and it's awesome stuff. So I want to ask you a few questions, Turney, that are probably on the minds of our friends that are here from all over the world. What was an average day like once you get started trading at Galleon? Like, you walk in the door, and then what happens?
It was, some days it was like a soap opera, because you never know what's going to happen, and you need to be prepared for anything to happen. But someone once said to me early on in my career that, other people might be smarter than you, or they might have better education, or they might be more well connected, but the one thing that no one can beat you at is what time you get to work or how hard you work. So I was able to sort of develop a routine where I was getting to the desk when I was capable, and that's a different part of the book, but from 6 a.m. to 7 a.m. was my quiet period, and it was sometimes the most productive part of the day, and it was actually really nice to be sitting in front of a computer. I'd leave all the lights off in the office, and it was just quiet, and I had the whole office to myself probably for 45 minutes, and it was just a slow gathering of information, and obviously I'm checking where futures are, S&P and NASDAQ. I'm checking overseas markets, the bond markets, worldly events. I'm looking at morning research in the U.S. I'm looking at my own specific stocks that I own or sort of on a watch list. Then I start to make phone calls as people start to trickle in, and I had a network, which we talked a little bit about. But one thing that I did right was I knew my weaknesses and I knew my strengths. And of course, it's great to network with people that are like-minded and similar to who you are. But if you're going to build a big network, and I'm terrible at technical analysis, like I'll look at a chart and I can't tell you if the stock's going up or down. But I have synergies with a guy like that, because I can help him with market rumors or the flow of the market. And he can say, we can pass information to each other, both trying to help each other. Or sometimes we would formulate a trade together, because he would see something on the chart and I would know, information about a particular stock, and then 1 + 1 equals, 2.
Yeah, and we're not talking about information about a particular stock like the old Charlie Sheen, blue horseshoe like Santa Caught Steal or whatever. We're talking about you formulated opinions from looking at the company, talking to other people about the company, maybe looking at the fundamentals, maybe hearing about how much flow is going into that company, how many other interested parties there are in that stock. And so you're aggregating this gut feel that is a combination of all of that.
I'm sorry, I didn't mean to interrupt.
Go ahead.
But one of the things I was going to say is, and I haven't heard other people talk about this, but typically at any one time in the market, there are 2 to 3 buzzwords that everyone is talking about. So you read, let's say, 6 morning calls, all 6 are talking about the same subject or the same sort of buzzword. So, just for an example, back in, 2003, we're talking, Martha Stewart, we're talking Tyco, we're talking Enron. You would hear accounting irregularity all day, every day.
Right.
And there's a way to sort of interpret that information, because if everyone's talking about it, what effect does it have on this stock over here when there starts to be rumblings of the same thing? So, I constantly was rejigging my mind saying, and in 2007, 2008 is a perfect time, because the beginning of 2008, everyone was talking about subprime. You couldn't go 15 minutes without someone talking about it. And then 3 months later, it was only about the credit market. And then, and it kept going from there. And
I like this conversation because traders that are here tonight are thinking, I can imagine someone in this presentation tonight watching this and saying, all right, this is pretty awesome. How does it apply to me? And I think you've said 2 things that I just want to make sure that everybody's here tonight caught, that Turney spent time that was quiet time in the office before everybody got there. You showed up and you had quiet time to do your research. And then I love this idea, and everybody listen to what Turney's saying. You followed the buzzwords. These mini trends, or it's like a news cycle about Katy Perry's mole on her butt cheek or something. You know what I mean? Like it goes into the news cycle and then it dominates it. And if you are a currency trader, you can do this. It can be about the interest rate picture, or about tapering, or if you're into stock trading, it can be about Apple's earnings or about the technology sell-off or whatever. You got to do your own due diligence here. Turney's not going to come over to your house tonight and press the button on your computer, but he just gave you a gift, and that is get up earlier, get that quiet time, and do something to get in the loop of that research. Maybe you don't know any traders on Wall Street. Maybe you do, though, have a computer and an internet connection, and you can get those buzzwords. It's, information is largely free on the internet these days, and you don't have to be inside the walls of a major hedge fund to get it. And Turney, I just think that's so absolutely brilliant. You don't need like 45 monitors. Like the number of monitors you had at your desk, Turney, did that ever like how
Zero.
much of an effect did that have on how much money you made, right?
When we first started Argus, they came to me and they're like, they were freaking out because we only had 3 weeks to open. I said, look, I'm like, you give me a phone and a garden tool, and I'm like, I'll get this done. That's all I need.
That is, yeah, like you see these pictures of these massive trading desks. So on the screen in front of us right now, you see this giant picture of a UBS desk or whatever. Each one of those people gets to stay in their job based on how much information they have and how smart they are and brave they are about implementing it. And you said something to me the other day on the phone, and it's been spinning around in my mind like a picture of Katy Perry's butt cheek. I can't get this out of my mind. And it is this, that you said everybody has access to the same information, theoretically. They could work hard enough to get it. But not everybody has the balls to do something about it. And the trade idea, you said something along the lines of this, and I don't want to put words in your mouth, but you said something along the lines of, the trade idea might look pretty good when you're first formulating it, but when it comes time to put money on the line, everybody gets a little bit scared. So for someone out there that's in the presentation tonight that maybe gets, that I know this is a good idea and I want to do it, came time to press the button. Did you ever have that trepidation, or were you born with this ability to just like put the gas pedal
No,
down?
I mean, it was definitely learned. gut played a huge part in my ability to trade, but it was developing patterns, and it was sort of knowing my own tendencies, and there's an anecdote that I'll share. This one's not in the book, but I was sitting in the office with my PM. It was after hours. We were having a normal conversation, and we were trying to figure out the market in the summer of 2007. So it was crazy. I mean, it was up 10%, down 5%, and it was nuts. And so we were going back and forth and trying to figure out the credit market, and deals are getting done left and right, 3, 4 a day. We'd never seen anything like it. And he says to me sort of casually, he's like, the first time that we see a deal that doesn't go through because of financing and gets busted up, he goes, that's the time to short the market. He's like, that's when we'll go 100% short.
That's the canary in the coal mine.
So fast forward,
yeah.
6 weeks, maybe 2 months. It's complete chaos in the office. It's in the afternoon. DCX, Daimler Chrysler, announces across the tape that the deal's not going through. There's an issue with financing, credit, the whole thing. And I look at my PM. I said, this is it. And he's like, what? I'm like, this is it right now. I'm like, we're going 100% short. And he's like, no, and he started backtracking. And I'm like, I know things are nuts right now, and it's scary, but we identified this. We identified this with no noise. We had a rational thought, and,
right.
Yes, do things change, and sometimes you have to readjust 1,000%. But at this point, it was all fear that was not allowing him
right.
to get short like he said he was. And
it sounds like what you're saying is that in order to take advantage of market conditions which move really fast based on emotions, fear, and greed or whatever, you've got to take the time to plan that out in an unemotional state at a time when you're outside
yes.
of that circumstance. You got to put the time in beforehand. That's just absolutely fascinating. How important was it for you to build the right network and cultivate the right network, as opposed to looking at a bunch of charts or reading a bunch of financial reports?
I think I had the advantage of knowing that I knew nothing. I didn't take myself seriously. It was probably similar to a surfer, looking at the ocean. A surfer who goes and says, "Oh, I'm going to take on the ocean," is going to get crushed. But I just wanted to ride a few waves and have some fun, and I was respecting the ocean or respecting the market. So I went in to all of this thinking that I knew nothing, and that probably made me smarter than 99% of the other people who were in the market. And so I knew that I wasn't great at doing my own research or reading, a report or, technical analysis wasn't really my thing. But I had a gut. I had an ability to get information. I had an ability to see things sort of before they happened. And so I knew that if I took my skill and networked with other people who might have another skill, that it could work out advantageous for both of us. And, and like I said before, I didn't necessarily only pick certain people. I spread, the seeds across all of the street, and eventually you sort of can figure out, oh, I work well with this guy, and the information is reciprocated, and this is someone that I can continue to share stuff with, and then there were other people who I felt I was taking advantage of, and rather than bang my head up against the wall, it was just a respectful, like, oh, hey, thanks, maybe I'll see you next week. So I think in part knowing that I knew nothing really was an advantage, and having the ability, there's something that people talk about successful people, and there's a debate between IQ and EQ, and I would have to guess I probably have an average IQ. I don't know. I don't know if I've ever even been tested, but I can guarantee my EQ is much higher than my IQ, and it was sort of an ability to be able to read other people and sort of
Right.
Sorry.
Right. That's fascinating because I got like a B plus on my IQ test. I think it was like an 85. I think that's a B plus, right? So I've never been the smartest guy in the room at all. And I love this thing that you're talking about, that you're pretty humble about it. You're way smarter than you give yourself credit for, and it's obvious from the book. But still the same, you have the humility to say, I'm not here, and I think this is what, if you're here in the presentation, the webinar tonight, listen to this, that it's not about being right or trying to avoid embarrassment, right? I remember you made a mistake when you first got to Galleon, and you had
Yep.
to walk over to this guy's desk. And you had a choice, you could be like every other schmo that's out there, try to hide it, bury it, and then later on get fired. You just said, I'm going to sack up, I'm going to walk over, and I'm just going to admit it. And I see this again and again in your book, that you're not afraid of looking stupid. You're just afraid of not learning fast enough to keep up. And I think that this is something we could all learn
Yeah,
from.
no, I agree. And the other thing, that obviously you got to be careful when you're dealing with money and your livelihood. But I've learned more from my mistakes and from my failures than from getting things right.
Yeah, that is okay, so you said something about calling people during the day for trade ideas, and I thought I would try to apply this to everybody who's here tonight. That's like a bunch of retail traders. Who did you call during the day? You said it a little bit earlier, like technical analysts, sell side researchers, analysts, other traders at other firms.
Yeah, I
Was that
mean,
kind of who it was?
I had the advantage of sitting at a hedge fund, so I had, sort of a built-in network just from working at a hedge fund. So, I had a guy from Morgan Stanley and Bear Stearns and Lehman and Merrill and on and on and on, who were covering me. But I would go out to some of these, networking events and some of these functions and parties, and I wanted to meet other people on the buy side or in the business. And so it ended up being a much bigger network than the people that were just servicing me. So, I was trying to make contacts anywhere I could, not whoring myself out, but I was trying to learn, and I was trying to meet as many people as I could. And, it was simple as, let's say it's 2:00 on a Friday and not a lot's going on, and I haven't talked to, Boris in 2 or 3 weeks. I just hit the phone and call him up, and what's going on?
Yeah.
Nothing. No, we talk about last night, and then next thing
Right.
you know, you're talking about, a trade idea, or he's working on something, and I'm like, oh, I'm working on the same thing. And like another thing that I'd just like to add is, I don't care how many Facebook friends you have, or how many Twitter followers you have, or how many connections you have on LinkedIn. I mean, that's garbage. Networking is face to face. It's on the phone. It's a real relationship. And, I don't know if that's becoming a lost art or not, but it is 100% of the reason that I had any success at all on Wall Street.
Well, what I love about that, and I'm going to try to once again apply it to all the people here, and I totally appreciate this perspective, is that someone out there on the webinar tonight is going to say, well, shit, man, I don't have the phone numbers of all these people. I can't go have beers with a Goldman Sachs trader. And what we sometimes don't remember is that, and I'm going to interpret what you did, Turney, so I'm just going to take complete license here to throw around your story. Okay, so for you listening here tonight, the story here is Turney's job was to construct and build trade ideas and construct a case for it. And the network of people these were sounding boards for stuff that would start from one phone conversation that might have been just a, hey, how were you last night? And driving down the road, and all of a sudden you got this trade idea building in your head. Take the time to build these trade ideas in your head and then bounce it off the people in your life that do this also, that trade your markets, and they don't have to work for Goldman Sachs. Turney's already told you that someone at Goldman Sachs might barely know how to put his shoes on in the morning, he's so hungover. But he's still a great contact because someone to bounce these ideas off of. And of course they've got access to, and they've got the markets and whatever else. But what you learn from the book is that Turney got paid to build and construct trade ideas and then act on them. And that's something that everybody here in the presentation tonight can do no matter where you work or where you live. But you got to go outside your bedroom and get on the phone or get on the email or start building some relationships with people that you can bounce this stuff off of. So with that said, I got one last story that I just absolutely love to hear you talk about. And it's there's some guy around or in the office or some research analyst that every time this guy panicked, you start like he was always wrong. And so like you were like, oh, that guy's panicking or that guy wants to do one thing, I'm going to do the opposite. Was there something like that? I can't remember.
Yeah, there was another sort of way that I was able to develop some trade ideas were based on other people's tendencies in the office. And so we had a biotech analyst who she was great at what she did. She knew infinitely more than I did about these companies, but whenever she came running to my desk, panicking, saying, why is Biogen down? Why is Biogen down? We have to sell Biogen. We have to sell Biogen. As soon as she would leave my desk, I would go out and buy because her panic was my buy signal. And so I didn't know anything. All I knew was when she came running to my desk, it was time to buy more. And then we had another guy who was brilliant, but he just needed to grow a pair. So when he would come to my desk and say, hey, let's buy 15,000 shares, he would walk away and I'd buy 25,000. And then, I remember my PM once pulled me aside and told me that we had to fire one of our analysts, and I actually called him the Black Cat. And, he was like, we got to fire him. He's terrible, blah, 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 blah. And I said, listen, he's the most valuable guy in the office. And my PM's looking at me like I was crazy. And I'm like, he's always wrong. He's 100% wrong. I'm like, that is gold on Wall Street. And so whenever he told me to do something, I did the exact opposite, and we always made money. So I was able to sort of see other people's strengths and weaknesses and their tendencies, and I was able to trade off of that.
Yeah, it's really objective. It's really sort of standing outside the whole situation and looking at it with you saying, okay, so this guy's always wrong. Most people are going to think he's an idiot. I'm going to look at it from a different perspective. Always like open-minded about it. And I just think, like I said, I think the world of the book, I thought it was an excellent read. I encourage everybody that's here tonight, pick up the book. It's probably $12 on the Kindle. It's probably $14-15 in hardback. It's totally worth your time to read the book. It's not some disgusting perspective from some jackhole trader on Wall Street. It's got some stuff in it that you can really take away to make yourself a better trader. So Turney, appreciate that I had some time to talk to you tonight. I'm going to turn it back over to the big Schlossberg to wrap this stuff up.
Well, stay with us. I'm going to keep everybody on the line now.